Hi, I'm Hawk Arps of Jan Arps' Trader's Toolbox, and this is Hawk's Scan Sentry report for the week beginning June 3rd, 2013. And we have a lot of charts to look at this week, so let's get right to it and see what the markets have to show us. Taking a look at the gold market, we've been following this downward move for several months now. And everyone wants to know, since the big precipitous drop last April, is it done moving down or is it going to move back up? Well, as I had predicted shortly after that drop and through this first pullback, I was looking for another test of these lows. We did test the close of the low close of that drop. That was in mid-May. However, we didn't really see the lower lows in price and the divergence in Radar 1 Fear Greed that I had hoped to see to confirm a move to the upside. So really it's just moving sideways in this range, which it could do for quite a while, as I've said before. Nonetheless, I still see the overall trend in gold as bearish. So in my day trading, I'm going to be looking at the shorter term nature of the market, but more interested in bearish trades than bullish trades. Let's take a look at a shorter term market, this being the 4181 share chart. We can see that on Friday we had a nice sell-off in gold, which formed this beautiful little bear flag here in the mid-morning. And of course gold slows down during the day, especially on a Friday, and it did that. Eventually, though, we broke out of this bear pattern right here at that breakout price, and we set a target at 1364.20. So we do expect gold to eventually make it down to 1364.20. As I said, we are looking for gold to the downside. However, shortly after this breakout, we do get a trend exhaustion 2 and a trend exhaustion 3 signal simultaneously on the last bar of the day on Friday. So I'm going to be wary about selling short immediately. I want to see if the low of this bar gets broken significantly, and then I will imagine that this downtrend is strong enough to break through these trend exhaustion signals, and will be more confident with a downside trade. Have just as much expectation that we'll see a little pullback to the upside, perhaps testing this resistance level here at 1392 or a little bit above that, maybe even as high as 1400, before we see this move continue to the downside. Taking a look at the continuous crude oil contract, on the daily chart we see since February price has been making consecutively lower highs and lower lows. Well, this gives us an overall orientation that we are in a downtrend, and we can see that the triple trender is currently bearish. All three trenders are above the price here, and the Radar 3 Trend Strength Index is showing us bearishness in the trend color. However, the trend strength is still above the zero line, so we would qualify this as a very weak bearish orientation. It could be another pullback in this short-term bullish trend. But as I don't see any particular bullish trading opportunities on the daily chart, I'm going to continue to be looking for trades to the downside in this market. Looking at a shorter term chart, here we have a 65,000 share chart of the same contract, and the downtrend is much more easily seen in this chart. You can see that the triple trender has been quite bearish, and here the Radar 3 Trend Strength confirms the bearishness. Again, there's no particular bullish trading opportunity other than the fact that we're sitting here at this recent low as defined by our support and resistance line. So we could see a bounce off of this, but I'm going to be looking to trade a breakdown below that line or if we do pull back up, look for a pullback trade to the downside, similar to these pullbacks 23. Taking a look at the S&P E-mini futures contract, the daily chart, the uptrend that we've been in for the past 6 months is easily seen. And the question that's on everyone's mind, including my own, is this pullback we've seen in the last week, is this a trend reversal or is this a pullback in the uptrend? Well, the triple trender has not confirmed any downward trend orientation yet, whereas the Radar 3 Trend Strength Index did turn bearish this week and is in fact showing quite strong bearish orientation. We got a Trend Exhaustion 2 signal right here at the top of this move, which gave us a portent that the price was going to move to the downside. It was a good opportunity to exit the long positions. Now, whether it's time to go short or not, I'm still not convinced. I don't see any really strong divergence sell type signals, but all of these indications do show us that it's time to get out of our long position and step aside. Perhaps look for an entry opportunity from this pullback, or look for a downside move. We'll see what comes up next. We do see this oversold Radar 2 here, so we expect to see a Trend Exhaustion 1 signal here at some point soon, giving us a short-term buy opportunity, but whether that's going to last, I don't know. If we drill down to a 50,000 share chart, which gives us a view of pretty much the way the last week traded, you can see a lot of it went sideways, whereas there were a couple of strong moves down, including the strong move at the end of the week on Friday afternoon. And whenever you see a strong sell-off on Friday afternoon, that is often indicative of a potential weak start on Monday. So the 50,000 share chart is much more bearish than the daily chart, and I'm thinking that we might see a move to the downside, perhaps find a selling opportunity somewhere around this resistance level at 1640. Since this is the Sentry report, let me take a minute to show you how I'm looking for some stock trading opportunities this week. As we noted on our analysis of the S&P futures contract, we're not sure if this is a pullback in the uptrend or an early downtrend, trend reversal opportunity. So I'm going to be looking for trades both long and short. And the way I'm going to do that is I'm going to look for a pullback trade for the uptrend oriented and a early breakout to the downside for the downtrend. So what I'm going to do is I'm going to show you that what we have is a list of the 500 stocks of the S&P 500 on this spreadsheet here, and some of our scanning tools that identify some trade setups, the pullback 23, trend exhaustion 1, breakouts from a trend lines, flags, auto divergence, etc. So if I'm looking for a pullback, I'm going to look for a pullback 23 combined with a trend exhaustion 1, a setup I like to call trend exhaustion 1, 2, 3. And that often identifies a trend or pullback divergence. So I'm going to sort on bars ago and find something that has a pullback 23 and a trend exhaustion 1 both on the recent bars. Here you can see that there's a few of them. Centos had trend exhaustion 1 bar ago, and here Target and TJX both have signals on this bar. So let's take a look at TJX and see what that looks like on the chart. Well, here we see the daily chart of TJX. I have it set up. You can see we have the trend exhaustion 1 and pullback 23 both lined up here. It looks like we've just pulled back into the long-term trender, and fear greed is bullish. Everything's looking pretty bullish on this chart for a pullback opportunity. In fact, it even is pulled back almost to the breakout point from this earlier breakout. So I'm going to be looking for a long entry opportunity in TJX. Now for a bearish signal, I'd like to find something that has had a recent breakdown from an uptrend line that actually shows confirmed motion in that direction to give me an early entry opportunity to a downside stock. So what I'm going to do is I'm going to take my trend line signals and sort by type, and I want bearish ones here on the top. These are bearish pullbacks. I want a bearish breakout, so I'm going to scroll down here to bearish breakout, create a little line right here, and now I'm going to sort by bars ago and look for something that has at least one bar of breakout in our favor. So here you can see BHI matches that criteria, CAH, CVS, KMI. All of these look like they could be potentials. I've pre-picked CVS, so let's take a look at what CVS looks like. You can see here on the chart, the daily chart, we did get a nice divergence here near this top after the bull flag found its target. We got a bearish pivot divergence, and here's another signal that I really like, bearish signal, where the radar 3 trend strength crossed from from bearish to bullish above the zero line, but stayed pink, then crossed back below the zero line, staying pink. This to me is a good reversal signal. So I'm looking for a downside move. You see we have deceleration in radar 2. We got the breakdown from the uptrend line. So all this one needs to do to confirm bearishness is to break through this long-term trender, and it will be in a confirmed bearish trend. I want to thank you for taking the time to watch this short video from Jan Arps Trader's Toolbox, and I want to remind you that all of the examples provided today are for purely educational purposes. Jan Arps Trader's Toolbox is not recommending that you buy nor sell anything. In fact, trading equities, forex, currencies, futures, all of these can be very hazardous to your account. We're not licensed to recommend that you buy anything, but we are licensed to make some great technical analysis tools. So may the trend be with you.